Weekly market outlook, first full week of June, second week of June, obviously. Let's get started. This is for the 5th to the 9th of June 2023. Let's recap a pretty interesting week last week. So we've got a few things to consider. Number one, we've got the NBS manufacturing PMI coming out from China. This came in a little bit on the downside, kind of impacted the Aussie USD, New Zealand USD much more significantly. It kind of takes away a lot of the risk assets in the market. Oil was severely affected by that PMI numbers that was on Wednesday. And then we have the JOLTS job opening numbers, which is surprisingly really high, back up above 10 million, which is I guess that would be the first indicator to a much better employment numbers in the US. And then on Thursday we've got the Chinese manufacturing PMI numbers. This one here is above the market expectation, market consensus, kind of reverted everything that was affecting the Aussie USD, affecting the oil prices. It kind of bumped it up a little bit, so it brings back a little bit more on the risk assets. The risk sentiment was a little bit more positive. We've got the flash inflation numbers coming out from the Eurozone. This one here was down because of energy prices again. Previously it was 7%, consensus 6.3%, came in at 6.1% for the Eurozone. Unemployment rate on the Eurozone fell down 6.5% from 6.6% as per consensus. This one was revised. And then we have the US employment numbers. Obviously this one here is a little bit of a mixed bag, so take it how you will, but we got a strong indication in the short-term numbers, which is the NFP numbers. This one here was a surprise to the upside, a huge surprise to the upside. 339,000 versus 190,000 consensus. Previous number was 294,000, which was already revised up as well. So this one here was a huge bump up, but the unemployment rate was bad, really bad. It was 3.4, expected to go up to 3.5%. It came in at 3.7%. Now the breakdown for the unemployment rate, this one here is a little bit unique because some of the indicators that we were looking at was the breakdown in terms of the unemployment rate. And one thing that's kind of a little bit uncomfortable to discuss is actually in regards to race. And the black unemployment rate was pretty much a little bit higher than expected. Now this is actually used by some economists as more of a recession indicator, so it kind of hides that NFP, the higher NFP numbers a little bit. So retail traders will probably look at the NFP numbers. Oh yeah, it was a surprise to the upside. It was really good. But fundamentally speaking, if we take a look at the unemployment rate, it wasn't great, right? Just by looking at the number, it was 3.4% to 3.7%. And also the breakdown wasn't great either. So the employment numbers is actually a little bit of a mixed bag here. Now, the concern for the market is obviously what the FOMC is going to do, right? We were talking about the FOMC skipping the interest rate in June. I think that would still be the scenario that would play out in June, but again, pending the CPI numbers. If we have a really high CPI numbers on the 13th, then on the 14th, the FOMC would probably decide to hike 25 basis points. But right now, all things aside, the underlying fundamental still points to a potential skip in June, despite the higher NFP numbers. So I guess retail traders would be in a very difficult position because I think everyone was kind of cheering that NFP numbers. If you guys are trading the US dollars, that would be like the dollar boost that it needs, but it might actually be short-lived. So be a little bit more cautious on this one. And also we have an update on the US debt ceiling crisis. This is averted, no issues at all. House voted for a yes. Senate immediately voted for a yes as well on Friday. So the bill was already signed. US debt ceiling crisis, that's pretty much gone. So there's no reason for a run to safe haven assets anymore. I think we have a much more cheerful equity market as well in the US. I think that's really welcome relief. But that's last week. It was a pretty interesting week because we see a huge movement in the market. In particular, if you take a look at what we talked about last week, the potential for the US dollar correction, that was actually on track for for that correction until the end of the week, where the NFP number posted a really surprising number, which is 339,000. But again, that is something that we are going to be discussing again on the technical side for this week. All right. Coming up for this week, we actually don't have a lot of fundamentals, so maybe take a little bit of a breather unless you're trading the Australian dollars. Then we've got the RBA interest rate decision, 3.85%. They're likely going to pause at 3.85%, but there are several indications to what the RBA is likely going to say. Now, RBA has already said to Parliament about the risk of upside inflation, so I think we're going to be getting the same message coming up from the RBA. That yes, they might pause for the month of June, but there's a potential for them to actually hike in July. So I think what's going to come out after the interest rate decision, or the statement itself, I think the statement could be slightly hawkish, so be a little bit more careful if you're trading the Aussie dollars. In terms of the outlook for the Aussie dollars, we posted out some of the outlooks on the Aussie dollars already this morning, but I think there is still room for the Aussie to actually appreciate a little bit more against the US dollar. And we have the GDP growth rate, quarterly GDP numbers for the first quarter as well, which is interesting because the previous number was 0.5%. The consensus is at 0.3%. So we might actually see that number coming in at 0.3%. We might actually see a little bit of a slowdown in terms of GDP growth rate in Australia, but this is back to back. Like we've got this on Tuesday and Wednesday. So if you're trading the Australian dollars, I think this week the Australian dollar could be a little bit more volatile. So just keep that in mind as well. Then we have the Chinese balance of trade, the US balance of trade, the Australian balance of trade, pretty much following that. We've got the Chinese inflation numbers. I don't think that's going to be a lot of focus unless you're trading some of the risk assets like the Aussie USD or like the US oil. But other than that, we don't actually have anything that is of high significance to the currency majors, with the exception of the Aussie USD as well. Just the Aussie USD. Okay, that's pretty much it from the fundamentals. Might skip the ISM services PMI. I think the ISM services PMI, I think we could be getting that higher number, but again, it is services PMI, so we're not really too concerned about services PMI. It's already been above 50 for quite a bit of time, so no real rush into looking at the ISM services PMI as something that's going to be market moving, unless it's really, really strong to the upside. If we get a number like 55, 56, then yeah, it could move the market significantly. All right, let's take a look at the dollar index. In terms of technical correction for the dollar index, I think we are still on track for that. In terms of the momentum, I think we are coming off the oversold condition for the dollar index. There are supports, obviously. So this one here, we've got 103.50 as a support. That's basically where price bounces off last week, following that initial turnaround from 104.50. Below 103.50, we've got 103, and then ultimately we still have 102.50. That's kind of mid-range within the Ichimoku cloud, but that's kind of the limit in terms of how far the correction could go. Is it still in that correctional phase? I think we're still within that correctional phase if we take a look at all the other FX majors as well. So that's the dollar index. This is the Aussie USD. This one here, if we take a look at the Aussie USD, this is currently capped by about 78.6% Fibonacci retracement. Where it opens this week, it opens up above pivot. The pivot is roughly around 0.6560. So we open up above pivot. In terms of how far up it can go, I think that would be the main concern for the Aussie USD. Number one, obviously, we need to surpass that 78.6%. But beyond that 78.6%, I think we're going to be looking at resistance one on the weekly pivot at about 66.80. Ultimately, how far can it go? It could potentially go to 67.50. But once it gets to 66.80, there's going to be that tough level to break, which is 66.75 to 67 cents. So I think that's where a lot of people are going to be focusing on the Aussie USD. If they have a long position, I think they would be getting out at around 67. So be careful if you're trading long the Aussie USD for the correction. Keep in mind, this is still a technical correction. It is not a trend reversal for the Aussie USD. So just keep that in mind when you're trading the Aussie USD, especially with this week. We've got a lot of news coming out from the Aussie side. All right. Euro USD, this one here, it's a little bit tough to kind of discern if does 1.07 holds or does 1.07 doesn't hold. Right now, in terms of the stochastics, it is coming out the oversold condition, but we actually don't have a full confirmation of whether this is going to be oversold yet. So we also don't have a significant bounce off 1.07. If you take a look at the movement around 1.07, it spiked down, it spiked up, it went back down to 1.07. So this one here is a little bit flat. I would say this is a little bit neutral in terms of where price is currently located. It's located around the weekly pivot, but it is below the weekly pivot. If we have a move back above the weekly pivot, which is roughly about 1.0710, then we might actually track a little bit higher, potentially towards 1.0775, 1.0780, where the resistance once is located. But I think the main focus, again, very similar to what the Aussie USD, I would be really focusing a lot more on the resistance too, because that's where the key level is located. It is located at 1.0850, but again, in between resistance 1 and resistance 2, there's going to be that 1.08, very similar to how the Aussie USD has that 67 cents. So this one here is still a little bit too early to call whether or not there's going to be a confirmed correction for the Euro USD. Can this one be pressured lower? Yes. If price goes down and breaks below 1.0650 on the daily, I think we would be looking at more of a resumption to the downtrend for the Euro USD. And the pound USD, also a very similar dilemma in terms of where price is currently capped at. It is currently capped at 61.8%. That's roughly around 1.2550. Now, if we take a look at where the market is opening up right now, it is opening at the weekly pivot right now. Resistance 1, again, located at 1.2550. Resistance 2 is located at about 1.2660. Overall, for the pound USD, I think we still have that momentum left, right? It's just the scenario whether or not it's actually going to surpass 1.2550. So I think what we're going to be looking at for the pound USD is that we're likely going to see the pound USD appreciate in the first 2 days of the week, right? And then it's likely going to test 1.2550. If it breaks 1.2550, great. I think we're going to be looking at more of an uptrend resumption for the pound USD. However, if it fails again at 1.2550, there's going to be a very high chance that the pound USD could transition into more of a choppy range bound market condition. So just keep that in mind for the pound USD here. In terms of support to the downside, I think we have a very strong support at 1.2350, and we definitely have 1.23 as a very strong support level. So if you're thinking of having a long position for more for swing trades or position trades, just keep in mind, make sure your stop losses, give it a little bit more room. I think in terms of where's the safe stop loss, I think that would be below 1.23 for now. But again, we need to see how price is going to react around 1.2550. Would it fail? Would it pass it? Overall, I think this one here is still bullish. It's just that we've got key resistance level that the market needs to overcome. Right? For the dollar Japanese yen, very similar situation with the dollar index here. I think what we need to watch out for is actually 141. 141 cap on the dollar Japanese yen could indicate that the market is actually afraid to take the dollar higher against the Japanese yen. Obviously, some concerns to think about is the Bank of Japan monetary meeting this month. They're going to remove the YCC. I think this is the discussion that goes in back and forth. I don't think we need to consider that too much. But right now, in terms of the dollar Japanese yen, I think this one here could actually still be very well supported. We're not going to be looking at a significant drop too far from 138 at the very least on the dollar Japanese yen. So I think just on the safe side, I think for the dollar Japanese yen, we would see a little bit more of a support coming in at 139, 138, right? In terms of resistance to the upside, obviously we got 141. Where price is currently right now, it is at around 140. So we could either see that rejection from 140, price is unable to break and continue to go higher than 140. We could see a little bit of a short selling towards 139, potentially towards support 1 at about 138.62 for the dollar Japanese yen. But I don't really expect a huge trending movement on the dollar Japanese yen. I do expect a little bit more of a subtle range bound market condition for the dollar Japanese yen. All right, so that's pretty much it for this week. It's gonna be a little bit more of a technical week rather than a fundamentally driven week, so just keep that in mind. Focus on the key levels that we talk about in this outlook, and good luck with your trades. I'll see you next week.